Something rare is happening in the global financial system. A metal that once anchored empires is sending a warning signal again. Not a rumor, not a headline, a pattern. Across markets, confidence is thinning. Debt is expanding. Governments are borrowing at a scale that would have shocked every previous civilization. And at the center of this pressure sits a quiet signal that history has never ignored. Silver is not just a commodity. For most of human history, it was money. It paid soldiers, settled trade, and measured trust. When silver was strong, systems held together. When silver failed, something deeper broke. Right now, the United States carries a debt load of $34 trillion. That number alone tells a story. But it's not the size that matters most. It's the strain behind it, the pressure to print, the pressure to intervene, the pressure to keep the system breathing. And this moment feels stable on the surface. Markets still open, stores are stocked, paychecks still clear. But empires do not fall in a single day. They unravel quietly through distortions most people ignore. Silver is one of those distortions. The mystery isn't whether trouble exists. The mystery is deeper. How did the world arrive at a point where debt is normal, money is stretched, and trust is quietly thinning? Because this has happened before. Not once, not twice, but across centuries. Every time silver collapsed, empires followed. And if the pattern holds, then what we are seeing now is not random. It is the opening phase of something history has already written. Rome did not fall because of barbarians. It fell because its money failed first. For centuries, Rome's power rested on silver. The denarius was trusted across Europe and the Mediterranean. Soldiers accepted it. Traders valued it. Taxes were paid in it. Rome expanded faster than it could sustain. Armies grew. Bureaucracy grew. Borders stretched. And silver was not keeping up. So the state intervened, not by raising real wealth, but by weakening the money. Roman officials began reducing the silver content in coins. The denarius still looked the same. It still carried the emperor's face. But inside, the metal was cheaper, lighter, diluted. At first, nobody noticed. Then prices began rising. Soldiers demanded more pay. Merchants charged more. Trust faded. The government responded with more controls, more minting, more intervention. And that created the final phase, loss of confidence. People stopped believing in the currency. They hoarded real silver. They avoided official coins. Trade slowed. Loyalty weakened. Rome's collapse didn't start with invasion. It started with silver. Centuries later, the world ran on silver again. Spain flooded Europe with silver from the New World. China based its entire tax system on it. For the first time, a truly global silver economy existed. At first, it looked like a miracle. Spain grew rich. China stabilized its finances. Trade exploded. Silver flowed across oceans. Markets connected continents. But the same three phases appeared again. Spain spent faster than it earned. Wars drained treasuries. China's system became too dependent on steady silver inflows. That was financial strain. Then came intervention. Spain debased, borrowed, manipulated supply. China tightened controls and raised demands. The system became fragile. Then came loss of confidence. Silver shipments slowed, prices distorted. People stopped trusting the structure. China's economy contracted. Spain's empire hollowed out. The silver engine stalled and the empires lost power. Britain rose on sound money. Silver and gold anchored trade. The empire trusted metal more than paper. But industrial expansion changed everything. Factories grew, cities expanded. War costs rose. Government obligations exploded. Financial pressure returned. Then came intervention. Britain moved away from silver and gold discipline toward managed money. Once money became policy instead of metal, confidence became political. And that leads to loss of confidence. Currencies floated, trust shifted, empires shrank. Across all of history, the same sequence repeats. First comes financial strain. Then comes government intervention. Then comes loss of confidence. This isn't theory. This is centuries of monetary history. Every time silver weakened, the same story followed. Empires didn't fall because of bad luck. They fell because their money stopped working. Now look at the present. The United States carries $34 trillion in debt. That is financial strain, not temporary strain, structural strain. Interest obligations alone are enormous. Government spending is locked in. Promises exceed resources. So what happens next? Intervention. Rates adjusted, liquidity injected. Markets stabilized by force, not to build wealth, but to prevent collapse. And that brings the system dangerously close to the final phase. Loss of confidence. This does not mean panic tomorrow. It means erosion. Quiet, slow erosion. Trust in money depends on belief. Belief that it holds value. Belief that debt can be paid. Belief that promises will be honored. Silver is flashing the warning. When silver moves, it is not reacting. It is remembering. It remembers Rome. It remembers Spain. It remembers Britain. The system is now at the same stage every empire reaches before transformation. Not collapse in a day, but transition. History offers three outcomes. One is slow decline, trust fades, power drifts. The system weakens over time. The second is restructuring, painful, controlled, stabilizing, but never comfortable. The third is shock, sudden loss of confidence that forces rapid change. No prediction is being made here, no advice, no fear, only awareness. Empires do not die. They evolve or dissolve. And evolution begins with understanding. Silver is not shouting. It is whispering. The question is, who is listening? Because when money changes, history always follows. The story does not end with debt or silver or trust. Those are only signals. The deeper question is, what happens to a society when its money no longer represents stability, but survival? When people stop thinking in terms of building and start thinking in terms of protecting. That shift is invisible at first. It doesn't show up in headlines. It shows up in behavior. When trust weakens, people change how they plan their lives. Long-term thinking shrinks. Risk tolerance collapses. Innovation slows. And that is how empires truly begin to lose momentum. In Rome, citizens stopped investing in the future and focused on guarding what they had. In Spain, merchants stopped expanding and started hiding. In Britain, capital stopped flowing into industry and started flowing into safety. Every time money lost its anchor, society shifted from growth to defense. That same psychological shift is beginning to appear again. People sense instability even when they can't explain it. They feel it in prices, in debt levels, in how fast rules change, in how often policies reverse. And when that feeling spreads, it doesn't create riots first. It creates caution. Caution sounds harmless. But on a national scale, it is devastating. Cautious societies don't build empires. They preserve ruins. This is where silver becomes more than a metal. It becomes a mirror. It reflects not just economic tension, but emotional tension. When silver moves in strange ways, it signals that people are questioning the system itself. They are no longer asking how to grow within it. They are asking how to survive it. And history is very clear about what happens next. The moment people stop trusting the future, power begins to leak out of the system. Slowly at first, then all at once. That is how transitions happen, not with explosions, but with erosion. Rome didn't wake up one day and realize it had fallen. Spain didn't announce its own decline. Britain didn't declare its empire finished. They all lived through long periods where things felt wrong, but not broken. Unstable, but not collapsing. Heavy, but not impossible. That is the most dangerous phase. Because in that phase, leaders try to preserve control instead of restoring trust. And that never works. Control can hold a system together for a while. Trust is what makes it grow. When money becomes something that must be managed aggressively, defended constantly, and explained endlessly, it has already lost its natural authority. It no longer speaks for itself. In a healthy system, money doesn't need to be justified. It is simply accepted. It is quiet. It is boring. When money becomes exciting, something is wrong. Silver becoming dramatic is not a coincidence. It is a symptom. It is the same symptom that appeared before every major historical shift in power. Now the question becomes, what kind of shift is approaching? History shows three broad paths. One path is gradual decline. Power fades, influence shrinks. Living standards erode slowly. The system survives, but in a smaller, weaker form. This is the quiet ending, the one that doesn't make movies, but changes lives permanently. Another path is forced restructuring. Old rules break, new ones replace them. Institutions are rebuilt under pressure. This path is painful, but stabilizing. It creates a different world, not necessarily a worse one, but never the same one. The final path is shock, a sudden loss of confidence that breaks the illusion all at once. Markets freeze, systems reset, power moves fast and violently. This is the path empires fear most. Which path unfolds depends on one thing more than any other: trust. Not confidence in leaders, not belief in policies, but trust in the money itself. Because money is not just a tool, it is a social contract. It is the agreement between millions of strangers that tomorrow will still work. When that agreement weakens, everything built on top of it starts to wobble. That is why silver matters, not because of its price, but because of its role. Silver is one of the oldest measures of trust in human history. Long before digital systems, long before banks, long before paper promises, people trusted silver because it was real, scarce, tangible, honest. When societies abandon that kind of anchor completely, they must replace it with something stronger than belief. They must replace it with credibility. And credibility cannot be printed. It can only be earned. That is where the modern system faces its greatest challenge. Debt can be rolled over, policies can be rewritten, markets can be stabilized temporarily, but credibility must be rebuilt slowly. And rebuilding it requires something most empires struggle to offer: limits. Every successful monetary system in history eventually faced the same test. Would it accept limits or try to escape them? Rome tried to escape them. Spain tried to escape them. Britain tried to escape them. And every time, escape led to collapse. Because limits are not weakness, they are structure. When money has no limits, power loses discipline. And when power loses discipline, trust disappears. That is the cycle. Silver is simply the early warning signal that the cycle is turning again. Not because the metal itself is magical, but because human behavior never changes. People always respond to pressure the same way. They seek safety. They seek honesty. They seek something that doesn't change when everything else does. That is why silver keeps returning to the story of empires. It shows up when systems are stressed. It shows up when confidence is thinning. It shows up when the future feels uncertain. And it always shows up before transformation. This is not about predicting collapse. It is about recognizing transition. Because transitions do not announce themselves. They reveal themselves slowly, in signals, in patterns, in metals, in debt, in behavior. The real danger is not that history will repeat. The real danger is that people will ignore it. Every empire that fell believed it was different, more advanced, more protected, more permanent. And every empire was wrong, not because it lacked power, but because it lost perspective. Perspective is what history provides, and history is very clear. When money becomes political instead of practical, the system enters its final stage. When silver starts acting like a warning light instead of a tool, something deeper is shifting. When debt becomes permanent instead of temporary, pressure becomes structural. And when trust begins to fade, power begins to move. Not from nation to nation, but from system to system. The future is not about which empire wins. It is about which systems survive. And survival always belongs to the systems that understand limits, respect trust, and remember history. Silver has already told this story many times. It is telling it again now. The only question is whether anyone is listening. Because when the old order begins to crack, a new one is already forming underneath it. Not in secret, not in chaos, but in silence. And silence is where every great transformation begins.